Hello matriculants, how are you guys doing? Welcome to our very first tutorial on Matric Accounting. Today we are doing last year's 2023 paper that was written in May. We're going to do paper 1, question 1. I downloaded this question paper from the Department of Education's website. So yeah, let's get started. I hope this will be really helpful, especially since you guys are preparing for your media exams. Okay, so first things first, when I'm attempting a paper, I look at the time allocated versus the marks for the entire paper. So you're allocated 2 hours, 450 marks. So if you divide the total hours by the marks, then you will get your time per mark. So you would have 0.8 minutes per mark. That will help you with time management so that you don't spend a lot of time on one question when you are done, or if your time is up, you just move on to the next one and come back later if you still have some time left. So we're only going to do question 1 in this tutorial. We will do the other questions in the next tutorials, right? So the first question is for 60 marks. You have 45 minutes to complete the question. So if you divide the 45 minutes by the 60 marks, then you would get 0.75 minutes per mark. So in all your sub questions, you would then take the marks, multiply it by 0.75 to see how much time you have roughly for that particular question. So the first one is a theory question. I would say this is one of the easy marks. You have to match the descriptions in column B to column A. So the first one, an independent auditor, is E. An independent auditor expresses an unbiased opinion on the reliability of financial statements, right? The second one, capital employed, that would be D. Total of ordinary shareholders' equity and non-current liabilities. The third one, current liabilities, that would be debt that will be settled within 12 months. And the last one, financial assets, that would be A. Investments such as a fixed deposit over a 3-year period, right? So there you go, you are done. You have your 4 marks in the back within 3 minutes. How easy was that? So the next one, you are told that the information relates to financials year ended 28 February 2023, and the company trades in electrical items, okay? So 1.2.1, you are required to calculate the value of closing stock of light bulbs at year end using the weighted average method. Now you are also told to refer to information B1. So with the weighted average method, you're basically just going to calculate the average price and you multiply it by the number of units. So the average price would be your total cost of inventory, all the inventory that you have on hand, and you divide it by the total units that you have on hand. So remember that the total cost should include the transport cost. Sometimes it's called freight, sometimes it's called carriage, whatever they call it. It needs to be included as part of the costs, right? So let's go to B1 to see what information we have been provided with. They tell us that a physical count was done at year end and it revealed that the stock on hand was 2.774 million. However, this figure excludes the closing stock for light bulbs. So now we have to calculate the value of the closing stock for light bulbs using the weighted average method. So like I said, we're going to take the total cost, which would be the 416,000 plus the purchases 3.4 plus the carriage 27,500. All of that we must divide by the total units, which are 8,000 plus 47,000, which gives us 55,000. That will give us the value of the closing stock for light bulbs. Okay, let's see how we did that in our answer book. So here's the answer, 416,000 plus 3,478,000 plus 27,500, all of that divided by 8,000 plus 4,700. That gives us 71,30 per unit. So now to get the value of the units on hand, you take the unit on hand, 1,700, you multiply by 71.3, that gives us 121,200. That's the value of the light bulbs on hand. But then remember, we also have other inventory. The stock count revealed that it's 2.7. So that 2.7, you must add it to this 121,210 that you just calculated. That will give you your total inventory, right? But then if you go to your trial balance, you will see that the trading stock amount is 2,969,800. But what we just calculated here is 2,896. So it means the inventory that is recorded in the books of the company does not agree to the inventory that was counted, that was actually on hand. So it means that there's missing inventory. Now what we call that, it's trading stock deficit. So the difference between this 2.8 and that 2.9 would be your trading stock deficit, and you would put it in your income statement as an expense. So remember that when you do your income statement. All right. Okay, so now we move on. We move on to the next question. What do they say here? They say we should calculate profit on sale on disposal of vehicles, and for that we should refer to a B2. Okay, let's go to B2 and see what we have there. An old vehicle was sold for 91,500 on 30 November 2022. So from here, what I would want to do is to determine how many months did we use this old vehicle before we sold it, right? So the year began when? On 1 March 2022. So you're going to count the months from March to November. That's March, April, May, June, July, August, September, October, November. That's 9 months. So it means we will have to depreciate this old vehicle for 9 months. And that depreciation, we will add it to our accumulated depreciation for the year. Now remember, the formula to get your profit on sale of an asset is your selling price minus your carrying amount. And the formula for the carrying amount is cost minus accumulated depreciation, right? So now they've already given us the carrying value at the beginning of the year was 104,000, and depreciation is 20% per annum on diminishing balance method, right? So you should remember that with the diminishing balance method, you calculate depreciation on the cost minus the accumulated depreciation, meaning you calculate the depreciation on the carrying value. So we are so lucky now, they've already given us the carrying value. So we're just going to take that carrying value and multiply it by 20% and multiply it by the 9 months that we used this vehicle before we sold it. So let's have a look in our answer book. So we're going to take the 104,000, which is the carrying amount at the beginning of the year, multiply by 20%, multiply by 9, divide by 12. Remember, the formula for depreciation is ART, A-R-T, amount, rate, and time. So that gives us 15,600. That's the depreciation on the old vehicle that was sold, right? So what is the accumulated or what is the carrying amount on the date of sale? Is that 104,000 that we had at the beginning minus the current depreciation, which we just calculated now. So our new carrying amount is 88,400. So in order to get our profit on sale, we're going to say the selling price 91,500 minus the carrying amount 88,400. We made a profit of 3,100. So that's it. You are done with that question. And how many marks do you have? You have 5 marks in the bag. So yeah, just within 3 minutes you've already collected 5 marks. The next question, we have to calculate the total depreciation for the year. So this means we calculate depreciation on all the assets that are depreciable in this question, right? So let's go back to the information. We have already calculated the depreciation on the old vehicle. It was 15,600. And now they tell us that depreciation on the remaining vehicles, meaning vehicles other than this one that was sold, the depreciation for all of them was 145,200. So if you add this to the 15,600, it will give you the total depreciation for vehicles. So 15,600 plus 145,200 gives us 160,800, which is the depreciation for vehicles. Okay, and then we move on to equipment. They tell us that equipment is depreciated at 15% per annum on cost. So this one is not on diminishing balance, so we don't need to deduct accumulated depreciation from the cost. We're going to calculate depreciation on the cost. They tell us that they bought new equipment on the 31st of July 2022. Again, we need to determine how many months did we have this new vehicle in the current year. So we're going to calculate from the 1st of August 2022 until 28 February 2023. How many months is that? That's August, September, October, November, December, January, February. So we had this new equipment for 7 months in the current year. Okay. But then they don't tell us how much is this new equipment. We have to find out for ourselves. So this is like completing a puzzle. Let's go to the trial balance and see what we have. We see that for equipment in 2023, we have 822,000 for equipment. In 2022, we have 774,000. So you see there was an increase. So that increase is our new equipment, right? So let's see how much is our new equipment. 822 minus 774 means we bought equipment for 48,000, right? So that 48,000 we multiply by the rate and by the 7 months that we had the equipment. So that's 48,000 times 15% times 7 over 12. That gives us 4,200. All right. Okay, so we have the depreciation for the new equipment. But what about the old equipment? How are we going to get the depreciation for the old equipment? Let's go back to the trial balance. If you look at the equipment, you will see in 2022, the equipment was 774. So that is your old equipment before we got the new one. So this one, we know that it was there for 12 months. So we're going to depreciate it over 12 months. So let's see. Depreciation on the old equipment, 774,000 multiplied by 15% multiplied by 12 over 12. That gives us 116,100. So if you add that to the 4,200 of the new equipment, you get a total equipment depreciation. Sorry, I had put vehicle here. A total depreciation for equipment is 120,300. So to get the total depreciation, you're gonna take the total depreciation on vehicles plus total depreciation on equipment. It gives you a total of 281,100. And you are done. You have how many marks? You have 7 marks in your bag, right? So now we move on to the next question. So this is our main question. This is where the fun begins. We have to complete the statement of comprehensive income for the year ended 28 February 2023. It's for 29 marks, so roughly you have 21 minutes to complete it. Remember, if your 21 minutes is up and you haven't finished the question, just move on to the next one. And if you still have time at the end, you can always come back and finish. Right? So let's see what information do we have. So we were given an answer book. So normally what I do before I even go to the information, I take this information that we are given here in the trial balance and I plot it on the answer book inside of brackets, because there might be adjustments. So any adjustments that are there, I know that my starting point will be these amounts. I will either minus or add from or to these amounts. Okay, so now let's look at our answering book. So in the answering book, you will see that they've already included some amounts here. So it's like some sort of a puzzle. You have to fill in the missing numbers. Okay, so you see what I was referring to here for rent income. I saw that on the trial balance it's 89,700. So I just put it in my brackets like this. Just leave it open like that in case there's any adjustments. The same for audit fees, the same for directors' fees, bad debts, anything that they might give you on the trial balance. Just put it in an open bracket like this in case of any adjustments. And the nice thing about this is that this will help you to get marks. So even if your total amount here is wrong, you may still get these marks here, and then that total amount may be a mark with error. So this is a very good exam technique. Okay, so from this piece of information, we have already calculated the value of stock, and then we also spoke about the trading stock deficit. So maybe we can even start with that. Let's put trading stock deficit. That will be the 2.9 that is on the trial balance minus the 2.8 that we calculated. So our trading stock deficit is 73,790, right? And for this one, we already calculated the total depreciation for both vehicles and equipment. So already we can populate that in our income statement. Here's our depreciation. We put the total amount that we calculated up there, which was 281,200. See how easy it is? You don't even spend much time anymore because you've already done it. And then we also calculated, remember the other question asked us to calculate profit on sale. We calculated it, so let's just plug it in onto our financial onto our income statement. So here's the profit on sale that we calculated earlier on. Easy marks. Even if your answer was wrong in this question, you would probably get it as a mark with error here in the income statement, right? Okay, now we have information about the auditor's fees. They tell us that the auditors are owed a further 38,800. What does that mean? So if you look at the trial balance, you see the auditor's fees is 155,200. This means this is not the entire amount that we're supposed to pay in 2023. We still need to pay them 38,800. So on our income statement, auditor's fees, we're going to increase it with 38,800, and it gives us 194,800. This was an easy one, very quick. And then for this one, we are told that we received 9,000 from an insolvent estate of a debtor, Billy Kroon. His estate paid 80 cents to the rent of his outstanding balance. So in simple words, it means the estate paid 80% of the amount that he owes the company, right? So the money was received and it was recorded, meaning they debited the bank and they credited receivables. That's sorted. The balance of his account must still be written off. So they paid 80%, right? That means 20% was not paid. So that 20% that was not paid must be written off as a bad debt. So that would increase our bad debts expense, and it would also decrease our debtors control. Okay, let's see how we calculated that. So this 9,000, we know it's 80%, but we are looking for 20% of it. So we're going to say 9,000 multiplied by 20 over 80. That gives us 2,250, meaning we must increase our bad debts by 2,250. Okay, so let's go to our bad debts. We make our adjustment at 2,250, and that's our new bad debts, right? You see how simple it becomes if you just start with your starting amounts in the brackets and you just adjust as you go. All right, so if you are asked to do the statement of financial position, remember you need to deduct that bad debts that we just calculated here, because it is not yet recorded, right? And then the next information, they tell us that the provision for bad debts must be increased to 25,720. So we need to check how much was it before. So last year it was 21,020, but this year we need to increase it to 25,720. So it means we're going to have a provision for bad debts adjustment. It can either be income or expense depending on whether it increased or decreased. In this case it has increased, so that will be an expense. Let's see how we calculated that. So the new one, 25,720 minus the old one, 2102, that gives us 4,700, right? So that will be our adjustment there of 4,700, right? So remember, provision for bad debts, it reduces our debtors control or our trade receivables. So if you are doing the statement of financial position, remember to deduct the total amount of 25,720 from your trade and other receivables, right? Okay. And then we move on to the next information. They are telling us that this is for directors' fees. The company has 2 directors who were appointed in 2019. And a 3rd director was appointed on 1 October 2022. So this one is new. This director was appointed during this current year that we are dealing with. So we have to determine how many months was this director a director of the company. So we have to count from 1 October 2022 to 28 February 2023. How many months is that? That's October, November, December, January, February. That's 5 months. So it means this director must get director's fees for 5 months. All right, and they tell us that the directors all earn the same monthly fee. So it means this one will be easy. It will not be a lot of adjustments because they all earn the same amount. And then they tell us that directors' fees were paid during the financial year and they have been recorded, but one director has already been paid for March and April 2023. So our year ends at 28 February 2023, but this director was paid for March and April as well. So it means the director was paid for 2 months extra. So now the director was paid for 14 months instead of 12 months. So it means we must now reduce the director's fees by the 2 months fees because they don't belong in the 2023 year, right? So this director, we know they were paid for 14 months and the other director was paid for 12 months because they don't tell us any other information about the other director. Okay, so how much is the director's fees? Let's see. is 2.15 million, right? So it means in this 2.15 million, there's director's fees for 5 months for one director, 12 months for one director, and 14 months for one director. Okay, so how many months is that in total? That's 31 months. But of this 31 months, we know that 2 do not belong in this year. It doesn't belong in 2023. It belongs in 2024. So it means the months in 2023 are 29 months. So let's calculate the fees for the 29 months. That will be your 2.15 million divided by 31 months multiplied by 29 months. That gives us 1.885 million. So that's the director's fees for the current year. But then we have this fees for 2 months that were paid. So how did we get that? It's 2.15 million divided by 31 times 2. That's 130,000. So this is the amount that we must reduce our director's fees by, because this is the extra 2 months fees that don't belong in 2023. And the other thing to note is that since we overpaid this director, we overpaid them by 130,000, it means the director now owes the company. So this is a receivable. So if you are doing the statement of financial position, you would want to add this to your trade and other receivables, right? Okay, but let's see what we did in our income statement. Here's our director's fees. We have already put the 2.15 million. Now from that we minus the 130,000 that was extra, 2 months extra. Now our total director's fees for the year is 1.885 million, right? Okay, so let's move on to the next piece of information. Rent income. This one is my favorite. I know like rent income will always be interesting. There'll always be adjustments that needs to be made. So if you're not listening this whole time, this is the time to start listening very carefully. All right, so they tell us that rent income includes the rent for March 2023. Remember, our year ends at 28 February 2023. So they tell us that the rent includes March. So it means there is 1 month extra of rent income that we have received, right? Okay, and they tell us that the monthly rent was increased by 1,170 on the 1st of January 2023. So the rent increased by that amount from January. So it means the increase is in January and in February and in March, because we received the income until March. So those 3 months, they include the rent increase, right? So that means when you look at your trial balance, this rent income 89,700, it includes 3 months of that increase, 1,170, and it includes 1 month extra, the month of March. So we don't want March in here. So our goal in this calculation is to take out the rent for March from this 89,700. It doesn't belong in 23, it belongs in 2024. Okay, so let's see how we're going to go about calculating that rent. All right, so here's the summary. The rent increased in these 3 months. All right, and then the months without increase, it's 10 months. That's from March 2022 until December 2022. That will give you 10 months. So now to get the rent amount, we're going to use solve for X. So we will let our rent that doesn't have an increase to be our X in our calculation. So we know that the total rent income is 89,700. That 89,700, we know that 10 months is the rent without the increase, which is our X, right? Plus the 3 months where rent was increased, so where the X was added with 1,170, that's the 3 months. So your formula will be 89,700 is equals to x times 10 plus x plus 1,170 times 3, right? Moving on to the next step, x times 10, that's 10x. X times 3, that's 3x. 1,170 times 3, that's 3,510, right? Okay, and then in the next step, we're going to deduct 3,510 from both sides. So we deducted from this side and we are left with 13x, 10 plus 3, we are left with 13x. And we deducted from this side and we are left with 86,180, right? And in the next step, we are going to divide both sides by 13 so that we can get our x. So our x is 6,630. So this amount, remember, it's the rent without the increase, right? But then we are looking for the rent with the increase because in March 2023, the rent had already been increased by 1,170. So the rent that we're going to be deducting from our total rent here is 6,630 plus 1,170, which is 7,800, right? So in your income statement, going to go to your rent income, 89,700, you minus that extra 1 month rent, 7,800, that gives you 81,900. You see how much fun this is? It's like you're just completing a puzzle. I've included here an alternative method if you do not like solving for x, if you're not like me. So this is how you would do it. You know that your total rent is 89,700, but included in this 89,700, you know that there's 1,170 of an increase, right? And you know that this increase only took place in 3 months of this total amount. So you take the 1,700 and the 1,170, you multiply it by 3, you get 3,510. So this is the increase, right? So if you want to get the rent without the increase, what do? You take the total rent, 89,700, you minus the increase for 3 months, 3,510, and that gives you 86,190. So this 86,190 is the rent without the increase. If you divide that by 13, because you know that rent was paid for 13 months, you divide it by 13, it gives you 6,630, right? And then you know that there was an increase for 3 months. If you divide it by 3, it gives you 1,170. If you add those two together, they give you 7,800. You see the answer is the same as with the solve for x method that we used. We just had an error here. It was supposed to be 86,190 and not 180, but then the answer was documented correctly. Okay, so you can use either method that is easy for you, this one, or you can solve for x, right? And here I've included another scenario, a scenario where the rent increase is provided as a percentage. So in our case, the rent increased by 17.65% on the 1st of January 2023. So the information is still the same. You would still calculate the same way you did here when you're solving for x, but now the difference is that you're going to be using percentages, right? So you're going to say 89,700 equals to x, which is the rent without increase, multiplied by 10 months, plus the x, and then you multiply it by 117.65 divided by 100. What you're doing here, you are increasing the x by 17.65%. So you multiply it by 117.65%, multiplied by the 3 months that had the rent increase, right? So the next step, you have 89,700 equals to 10x plus x multiplied by 3. That's 3x multiplied by the 117%. So if you multiply 3 by the 117%, it will give you 3.529. We just rounded it off here to 3.53. You add that 3.53 to the 10, it gives you 13.53x. So to get our x, we must divide both sides by 13.53. Then our x becomes 6,630, right? But then this one is without an increase. But we are looking for the amount with an increase because in March, the rent had already been increased. So how do we calculate the increase? It's going to be the 6,630, which we just calculated, multiplied by 117.65. That will give us 7,800, right? So yeah, that's how you get your rent adjustment. You just deduct that extra rent from here, you get your total rent for the year. All right, so we move on to the next information. It's the loan. They tell us that interest on loan capitalized has not been recorded. So it means we must go and record that, right? And then they tell us that the fixed monthly repayments, including interest, have been paid and correctly recorded for the financial year. And interest on the loan amounts to 60% of the monthly payments. But now you see they don't give us those monthly payments. It means we must go and figure it out. Remember, we said we are completing a puzzle here, right? So let's look at the loan on the trial balance. We see that last year the loan was 690, but this year is 524,400. So it means that there was a payment made. So to get that payment, you must deduct these two to see how much was paid. Okay, let's see how much we get. So 524,400 minus 690,000. We see that 165,600 was paid. So of that 165,600 that was paid, 60% is interest. So 165,600 multiplied by 60%, that gives us 99,360. So that is our interest expense. We will go and populate it on our income statement. Just like that. Easy marks. Then the last information that they tell us that income tax for the year was calculated to be 858,140, and they've already populated it on our income statement, so not much work to do here. But something to keep in mind when you look at your trial balance, you see that your income tax provisional tax payments was 875,000. So it means we paid 875,000, but we were supposed to pay 858,140. So it means we have overpaid the tax, right? So it means SARS owes us. So again, if you were doing your statement of financial position, that amount between this one, the one that we paid, the difference would be the amount that SARS owes us, and we would include it in our trade and other receivables, right? Okay, so now we have populated everything that they gave us information for. Whatever is left, it will have to be completing a puzzle, filling in the missing numbers. Okay, so now we have our other income here. We add it together and we have the total amount is 170,900, right? So that 170,900 we added to 7,650,000. That gives us 7,820,900. And this one we were already given, so that is an easy marks. We're going to say 7.820 million minus 4.894 million. Let's get our easy mark. Here it is. And then now here we have salaries and wages. There's no information that says anything about salaries and wages. So what does that mean? It means it's going to be a balancing figure. So it means from this total expenses that you were given, you have to minus all these other expenses that you calculated here in order to get the salaries and wages. So you're going to say 4,894,900 minus 194,000 minus 188,500 minus 219,769 minus 18,450 minus 281,100 minus 737,90 minus 4,700, and that will give you your salaries and wages. So this amount, even if it's wrong, you will still get it with error as long as you have deducted all these expenses from this total. So even if you made a mistake here, but you will still be able to get that mark there, right? And it's the case with most of these numbers here. Since you have put your calculations here, or maybe you have shown it under workings this side, you will still get your marks even if these amounts are not correct. Okay. So now what are we left with? Interest income. There's no information about it. Okay. Profit before interest. We don't have it. And we don't have net profit before tax. But we have been given net profit after tax and income tax. So we can always work backwards to see how much was the net profit before tax. So we know that to get this 2.002 million, we minus the 858 from this amount. So now we want to reverse that. So since we minus, what do we have to do? We have to add. So you're going to say 2,002,500 plus 858,140. That will give us the net profit before tax, right? The same here, we know that in order to get 2,860,640, we minus 99,360. So in order to get this amount here, we'll have to reverse what we did to get here. So since we minused, we will have to do what? To add. So it's going to be 2,860,640 plus 99,360. So that means our profit before interest expense is 2.960 million, right? The same with interest income. We know that in order to have this 2.960, we added the interest income to this 2,926. So how do we get the interest income? We're going to say 2,960 minus 2,926, because we know that if you add this 2, you will get the 2,960. So that's your interest income. And that's your statement of comprehensive income completed. Your 29 marks in the bag. If you made a few mistakes, maybe you might get a 20 or a 25. But if you follow these exam techniques that I've showed you, I'm pretty much sure that you will get a lot of marks here, because there's a lot of marking with error. So yeah, guys, let's do the last question. For question 1, current assets section of the statement of financial position. So we know that the current asset, what goes into current assets, that's your cash and cash equivalents, that's your inventory, and your trade and other receivables, right? So let's go to our answer book. We have already been given the total, so we have to determine what is the amount of these items that fall under current assets. Inventories we've already done earlier, so it's just a matter of plugging in here. Remember, we did it here in question 1.2.1. Our total inventory is 2,896,010. So you just plug it in here and you're done. Trade and other receivables. Remember, when we're doing our income statements, there's a lot of things that affected our trade and other receivables. There was that 2,250 of bad debts that we must reduce the trade and other receivables with, and what else was there? We have to deduct the provision for bad debts. That was 25,720 plus that extra amount that we gave to the director. The director owes us 130,000. It must be added to trade and other receivables. And we overpaid SARS. We paid 875, whereas we were supposed to pay 858. So SARS owes us that difference there. So this is our calculation for our trade and other receivables, which gives us this total. And for cash and cash equivalents, we are not given any information. But then since we're given the total current assets, it means this cash and cash equivalent will be a balancing figure. So we're just going to take this 7.6 minus inventory minus trade and other receivables. That will give us our cash and cash equivalent. And that's it. That's our 11 marks in the bag. Just like that, we are done with question 1 of paper 1. So yeah, I hope you guys really enjoyed this session. I hope it will be really helpful in preparing for your mid-year exams, guys. I will be doing the next question in the next tutorial, so be on the lookout. Remember, if you have any questions, you can put them on the comment section, or if you would like to have a one-on-one tutorial, you are welcome to ask for my contact details and we can arrange. I am wishing you guys all the best with your exams. God bless. See you next time. Bye.